What's going on, guys? Hope you're having an absolutely fantastic day. So today we're going to be talking about the upcoming CPI report as well as what I'm going to be doing with my personal portfolio. And first, let me start off by saying sorry for not making videos for the past week. I've been busy, and also welcome to the new subscribers, right? So I realized I gained some subscribers even though I didn't make any new videos, right? So let's start with CPI. For CPI, we look for the third consecutive lower print for the month of September, down from June's peak of 9.1% year over year to 8.5% for July, and then 8.3% in August. And if you can remember, in August that was actually a huge miss. So they basically, when they expected 8% print, right, or 8.1% print, so which matched April's 8.3%. To the June figure, we saw 10 out of 11 months of CPI data headed higher, and August 2021's year-over-year CPI was 300 basis points lower than August 2022, right? So that means 3%. So expectations for September of 2022 are a further modest move lower to 8.1%, right? So let me just start with some expectations, right? Because last month, right, they overshot to the downside, so they expected like 8% or 8.1%, right? So I think there is actually a chance for them, this CPI print to actually beat expectations, right? As in like maybe it's like just 8% or 7.9%, right? Because always, most of the time when they overshoot, right, the next report they undershoot, right? So that is just some psychological facts to know, right? So what do I personally think? Is there a high chance for it to move lower? So because of the oil situation, that it looks unlikely that we can beat it by a huge margin. So even if it comes in by 8%, you will see the markets rally, right? So due to the oil situation rallying from 76 to a peak of 91 because of the OPEC plus situation, right? So they basically cut production just because I think they have like some political games going on with Biden there, right? So yeah, on the one hand, I'm hopeful that economists are going to predict lower because they missed by a large margin last time, right? So usually how these things work is one time they predict really high and then they get knocked down because it's not as high as they predict, right? Let's say they expect CPI to move higher by 3%, and then 0.3%, and then it comes in at like 0.5%, right? So because their estimations were too low, they now predict for a 0.5%, and then what ends up happening is 0.3% comes, and then basically their estimations get knocked around, and then it affects how they predict the next one, right? So that is something that I'm looking out for. So I'm hopeful that it will be lower than they predict, but I'm certainly not betting too much on that, right? So if we take a look at the important things for CPI to look at, it's obviously food at home, and also the new vehicles and used trucks, right? So which are sky high right now, but I think they are coming down, right? Like these two are coming down, and the thing that is, I think, continuing to move out is a shelter component, right? Which the shelter component is 33% of the whole CPI basket. So I think if we were to see something move down, the three important things, right? Food at home, maybe four, oil, food at home, used and new cars, and also shelter, right? So if we look at shelter and it goes down a bit, right, it can really help us with the CPI numbers, right? So what am I doing with my personal portfolio, right? So I have to talk about my plans, and also maybe you guys can take some ideas from there, right? So the other day I bought some meta call options. I think it was around 130 something dollars. I can't remember the exact amount. So you can see that I'm down a few percent of that. So it's 6 months call options, and my bet is basically that their earnings are not going to come in as bad as Wall Street expects, right? Because you can see Meta now trading at a 10.65 PE ratio. So I actually bought some Meta stock yesterday as well. No more options for me because I've already maxed out my options allocation. So BABA also, I bought some options. I think somewhat around the $82. So maybe a terrible timing because once I bought, this happened. So terrible for my options, right? But my option positions are not too big, right? I'm mostly focused on stocks, right? So I expect both of them, their earnings to beat, right? Because the expectations for them are just way too low, right? So if you look at the numbers now, BABA is trading at about a quarter of their whole market cap, right? It's in cash right now, right? So they can really buy back shares and do other things like that, which will definitely boost the prices in the short term, right? So my short term outlook is I expect both these companies as well as Warner Brothers Discovery to beat earnings, right? And then what I'm going to do is I'm going to use that rally to lighten up my positions, because I feel that is not the ultimate bottom, right? Like where we are now, it's not the ultimate bottom because of this, right? So if you take a look at how much credit card debt do Americans have, American total credit card balance is 887 billion in the second quarter of 2022, according to the latest consumer debt data from the Federal Reserve Bank of New York. That's a 46 billion jump from the 841 billion in the first quarter of 2022, right? So if you look at, I think since the second quarter of 2021, credit card balances have risen by 100 billion, right? So what I can tell from that is Americans, actually there is two choices when you're faced with a recession, right? Either you buckle up your belt, means spending less and all, or you take on more debt, right? And I think Americans have went with the second option because they expect all these things to just go away, right? So basically they expect the inflation to go away, they expect the Fed to stop hiking soon, right? And I think this is where I believe that we haven't really entered the worst part of this recession, where it's earnings recession, right? So I think some sort of pricing has been priced into the markets, but I don't think it's been 100% priced in, right? I think maybe it's like 10 or 20% priced in. So that is just my figurative estimation, right? So don't take that as financial advice, right? But I do feel like because Americans are taking the second option, instead of basically tightening their belt a lot, right? They are just taking on more and more debt. I believe eventually it'll lead to them having no more access to this debt, and then basically what will happen is all these companies' earnings will basically just get destroyed, right? So that's why I believe in the short term, earnings for these companies will still be very good, but in the longer term, which is like okay, I would say in the medium term. So in the short term, maybe I would put it as 3 months. In the next 3 months, I think all these companies' earnings are going to beat expectations, because the expectations for them are just so low, right? But I think after the 3 months, after the time that Americans no longer has access to all this debt, right, I think the earnings will start to come in sluggish, right? So if you're enjoying the video so far, do help me smash up the like button, hit subscribe, and also hit the bell button and press on all, right? So this will really help out the channel. And also watch till the end, right? Because obviously you don't want to miss any important information. And that is what Michael Burry talks about, right? The second leg of the stock market crash is normally due to earnings contracting, right? So if you take a look at meta platforms with 10 earnings, right? If their earnings are stagnant, right? So 10 is actually very cheap, right? But what the market is basically saying is that these earnings from 10, right? They will go down even more on a nominal basis, right? Basically, instead of this 10 PE ratio where Meta is, let's say, earning $10, it will be a 10 PE ratio, but they will be earning, let's say, $7, something like that, right? So that is the earnings part contraction, right? Not the price contraction, right? So the multiple contraction, I think that would be the right words. So basically what I'm going to do with my options, so this is just a two-part plan. What I'm going to do with my options, if we have a rally, I'm going to basically wait for earnings, and if there's an earnings rally, I'll wait maybe a week or something like that, and then I'll dump the options, right? So I don't expect the CPI report for November to be very good, right? So basically, because all the oil prices are continuing to move out, so that will also affect CPI prices. So the only reason in the last CPI report, the inflation even fell, right, is because of oil, right? So I'm taking a big look at this macro picture. So don't use it to make entirely decisions on your companies, right? Because you see, I incorporate both macro and micro, so it gets very, very complicated, even to me, right? So that's what I'm looking at. So basically, I think that because of strong earnings, these companies, Meta Platforms, Baba, and also Warner Brothers Discovery will rally, and I want to use that rally to basically increase my cash positions again, right? So currently, I'm sitting about 20 to 30% cash. So yeah, to give you some sort of idea of how my portfolio is positioned, right? So to clarify again, if we get a rally, I will sell off the options, and also I think the stocks I will leave it. I won't really sell off any shares, right? Except for Warner Brothers Discovery. Maybe I think if we have a huge rally, let's say a 20 to 30% rally, then I would sell off some shares as well, right? But for Meta and also Baba, I will only look to sell off the options, right? Not really the shares. So what happens if the other thing happens, which is it just goes straight down, right? So to me, that is the more unlikely scenario. But if that happens, I'll still use my cash position to continue to buy in, right? Because I am waiting for a relief rally to sell off. But if the relief rally never happens, then probably I'll roll my options, and also I will continue buying more shares, right? So that's my basically game plan for CPI, and also short term to medium term, right? But in the longer term, always the game is to acquire more assets, right? So I think that even Meta at these kind of prices, if you buy it for the next 5 years or something like that, I don't think it should keep you up at night, right? It wouldn't keep me up at night. That's what I would be saying, right? But for BABA and Meta specifically, I would be looking to exit at maybe 2 to 3 times my money, right? So I'm not looking for the crazy 10x's. Maybe Warner Brothers Discovery, I'm looking for maybe closer to 4 to 5x. But obviously, in the short term, if there is a rally, I would like to take some chips off the table just to make sure to manage my risk, right? Because there are other positions that I want to start, but I don't have enough cash to make sure those positions are good. So I don't really want to start them at the moment. That's why I'm looking to trim some positions to reallocate the funds, right? Because some things have gotten even cheaper than these things in the past few months, right? So I'm actually recording this part after I recorded the main video. So a lot of people will be wondering, right? So are you making some short-term predictions, right? So the answer is no. I have some sort of biases and some sort of insight to why I think like they will beat earnings and all that stuff, right? Because to me, these expectations are just set so low. And Warner Brothers Discovery, why I think they might beat earnings is because House of the Dragons has been a huge hit, right? So everyone I know has been watching it. So we have to look at earnings to see how it comes out, right? And I'm also saying that if A happens, I do A, right? If B happens, I do B, right? So that is why I'm making the video, right? My point of the video is not to predict the future and not to have people praise me as a messiah if I get my plays correct, and also comment below like I bet all of my life earnings on BABA and Meta options and I just lost all my money, right? So that's not the point of my video, right? The point of my video is to tell you what I'm doing and to be transparent, and also use it as a self-reflection tool in the future, right? So yeah, that's about all I wanted to share today. If you did enjoy the video, do help me smash up the like button, hit subscribe, and also hit the bell button. With that being said, have a fantastic day ahead and peace out.